Let's dive deeper into the state of the housing market, especially as we witness significant price drops across various regions. As we discussed, the worldwide real estate market is facing a troubling downturn. Redfin data reports that home values have fallen in over 180 U.S. locations in the last 3 months alone. A particularly noteworthy statistic is a 5.9% drop in Denver. While this may seem localized at first glance, it's important to note that this signals the beginning of a broader housing crisis that is beginning to affect a larger portion of the United States. So while these reports are alarming, we'll take a closer look at what they really mean for both home buyers and investors. Some of the biggest declines in property values have been recorded in Arizona, with the cost of a vacation home down by 18%. Arizona is a hotbed for real estate investments, given its popularity with tourists and retirees. So this sudden decrease is particularly noteworthy. Other cities like San Jose and Silicon Valley have seen a 13% decrease in value over the past year, while Seattle has dropped by 9%. Austin, Texas, which had previously been a booming tech hub, is also experiencing a 10% decrease. These are just a few examples of the many markets that are facing price drops, and this is just the start. There are several estimates floating around that suggest these markets might be overvalued by significant margins. Experts predict that some markets could see price drops by as much as 50% or even 60%. This is certainly encouraging news for potential home buyers who might have been priced out of the market in recent years. A price drop of 50% to 60% would undoubtedly create an unprecedented opportunity to buy real estate at a price that was once considered unattainable. However, it's important to take a cautious approach and consider the data before jumping to conclusions. In fact, based on our home price prediction model, we anticipate that many of these markets could experience an additional 25% to 30% drop. While this isn't the dramatic drop some might have been hoping for, it still presents significant opportunities for those looking to buy a home in a more affordable range. By the end of this video, you'll better understand how to navigate this market and the opportunities it presents. We want to make sure you're fully informed before making any decisions. So if this video proves useful, please leave a thumbs up and don't forget to subscribe to our channel for more updates. Let's take a look at some of the key data points from real estate rating organizations like Moody's. According to an article in Fortune, Moody's highlights 183 home markets that are expected to see the most significant price declines. Dallas is estimated to be 42% overvalued, Austin 61%, Boise 72%, Phoenix 54%, and Florida has seen prices 35% to 50% higher than the fair market value. This overvaluation is a critical sign that many markets are experiencing speculative bubbles, and it could lead to a dramatic price correction in the near future. In fact, these overvaluations have a historical precedent. The first major global housing crash occurred in 1929, at the start of the Great Depression, and the second in 2007, just before the financial crisis. What we're seeing today is eerily similar to those previous downturns, and the reason this crash is expected to be far worse is because it's not just localized to one region or country. It's a global problem. There's also a contagion element at play. In other words, what happens in the U.S. housing market doesn't just affect U.S. homeowners and investors. It reverberates across the entire global financial system. Banks become less willing to lend. Fewer people are looking to buy homes, and real estate, once considered a solid investment, becomes a risky proposition. The global housing crash can therefore trigger a downward spiral where demand for housing diminishes and property prices continue to fall. While we are seeing some signs of this broader collapse, many people are still in denial about the housing crash. Many sellers are holding firm to the belief that home values will continue to rise, and as a result, they are pushing back against potential buyers. This seller resistance is creating an inventory bottleneck, and new listings are starting to decline. It's also important to note that as the market continues to contract, home builders are expected to release a large number of homes that are currently under construction. This influx of homes will add to the already growing inventory and will force sellers to compete more aggressively in the market. One concerning trend that's emerging is a rise in foreclosures. Some markets have reported increases of over 100% year over year. I know many of you are hoping to find cheap foreclosure properties to purchase. While many homeowners in default still have substantial equity in their properties, if home prices fall by, say, 15%, and there's an overabundance of inventory in the market with few buyers, banks will seize those properties. That's when we could see a true flood of foreclosures come onto the market. It's likely that the market will continue to worsen over the next year or two. If you look back at the last housing crisis, values began to drop month over month starting in September 2006. By the end of 2007, prices had already dropped by 40%. This is a significant drop, and it could happen again, albeit over a longer time frame. If you're wondering when exactly the bottom will fall out and when the U.S. housing market will hit rock bottom, we don't have a precise answer. However, the trend is clear. The housing market is facing major declines, and the recession is likely to exacerbate the situation. Keep in mind that the unemployment rate will rise, and this will further depress housing prices. A higher unemployment rate means fewer people can afford homes, leading to reduced demand and, in turn, lower prices. When prices dropped by 40% in 2008, many people still didn't believe it was happening, but it was an undeniable reality. Much of what we're experiencing now is reminiscent of that period. Sellers are in denial, and there's a lot of confusion and competing narratives. However, this is all typical behavior during the early stages of a housing crash, and the most important thing is to focus on the bigger picture, the worldwide nature of this downturn. As the global housing crisis continues to unfold, patient home buyers and real estate investors will be rewarded as prices fall across the board. Simultaneously, interest rates are rising at their fastest pace in 3 decades, adding more pressure to the market. This creates a window of opportunity for those who are willing to wait for the market to correct itself and who are ready to make a move when the time is right. Redfin's report notes that 183 U.S. towns have experienced price drops over the past 3 months, but not all cities are seeing declines. Some, like Little Rock, Arkansas, Augusta, Georgia, Knoxville, Tennessee, Louisville, Kentucky, and Cleveland, Ohio, have actually experienced price increases. In addition, homes in New York City and Hartford, Connecticut, have continued to rise steadily over the past 3 months, even though many other areas have seen declines. If you're a home buyer or investor, these cities may offer stability during these turbulent times. They performed relatively well during the last housing crisis, and I expect they will continue to do well this time around. On the other hand, cities like Oakland, San Jose, Lake Merced, and San Francisco, as well as Abaso, Arizona, and Austin, have already seen a 10% price drop since August 2022. Other markets like Seattle, Atlantic City, Boise, Naples, and Las Vegas have also faced significant declines. The West Coast, particularly high-priced cities with a heavy focus on technology, are bearing the brunt of these price drops. Cities like Dallas, Stockton, San Diego, and New Orleans, as well as areas in Arizona and California, are also experiencing substantial declines. These markets have seen their values fall significantly, and they will likely continue to experience pressure as we move forward. In conclusion, this video has provided a closer look at the current state of the housing market, the expected price drops, and what you can do to navigate this turbulent time. While the overall outlook may seem grim, there are still opportunities for smart home buyers and investors. By being patient and waiting for the market to correct itself, you can make strategic moves that will pay off in the long run. If you found this video insightful, please give it a thumbs up, subscribe to our channel, and share it with your friends. We will continue to monitor the situation and provide updates as the market evolves. Thank you for watching, and we'll see you in the next video.